Okay, folks, so we need to give an update on the market and plays, including the next squeezers. Number two, I want to give my response to an expose, if you will, that the AMC squeeze numbers just don't add up. And then lastly, number three, I need to discuss a very big catalyst coming for a specific stock and what you need to know going into that catalyst. And the only thing that I ask in return for all of this is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, update on the market. You got the Dow up, the S&P, the Nasdaq, the Roskies. Very nice day. Lots of capital coming back in today. Crypto is also back on the uptrend, trying to recover from last week's flash crash. Notable discrepancy though between Mara and Riot's recovery and Bitcoin's recovery. Despite the underlying currency, Bitcoin getting very close back to its pre-flash crash region, lovely Mara and Riot haven't filled in that gap. Okay, next, IRNT is looking like a very, very hungry beast right now. And this morning, amidst really good earnings numbers, I said IRNT is showing heightened retail sentiment. Has gone up despite the risk-off trading the last couple of trading days, and thus I'm expecting more inflow periods this week as a result. I pay very, very close attention to how risky stocks trade on risk-off days, because if risky stocks can get capital even on risk-off days, they tend to go through the roof on risk-on days. And that has so far been the case with its after-hours run, even attempting to take it into newer highs. We'll see if it finds strength to hit a new high this week before its inevitable downturn, but very, very fun. I will add that the earnings report was legitimately good. And with pretty low short interest, this is definitely more of a catalyst play than a short squeezer. I'll keep you updated, but I continue to expect this to have more upward cycle runs this week. Okay, next, INDP was a very, very captivating play. We briefed on it this morning, 30 minutes prior to market open as always, because they announced that they were finally awarded a patent that they've been trying to get for a while. We were hoping for a catalyst euphoria run, and that is what happened. I said I wanted to see it sell off, ideally no more than to $9 support before attempting a new rally. It did a few better. It sold off maybe 50 cents into open and then went from $11.63 to $28.83, which is more than doubling. It then later concluded, like they all do, with a deep downward direction. Euphoria catalyst runs are very, very short and sweet, but never forget about previous history. A lot of people say, Charlie, previous history means nothing. Patterns never repeat themselves. But never underestimate the value of looking at the bigger context. Blow up INDP, for example. Not only do we see that, quite frankly, this stock has a long history of pump rallies on catalysts, but it always overreacts to catalysts and then dies off, or as the kids say, dumps. So by simply looking at the previous history, you could say, hey, wait a second, this has done this like 50 times in the past. Maybe when we have the next catalyst, I don't think that it's just going to go to the moon and then never come back down, and instead I trade the play itself instead of letting the play trade me. Okay, next, SPRT. Now, SPRT has officially turned into ticker symbol GREE after the merger, and it's been a little plummety pull. Still failing to hold any consistent level of support. Does though seem that the price drop is consolidating, and perhaps we end up somewhere in the low 40s, but until it shows proof of concepts, I say it's best left on the sidelines. I would say don't screw the last euphoria cycle win by making this into a massive loser. Okay, so Any is starting to wake up again today. Any reason why? Well, its merger partner announced that they had officially installed 7,200 miners and are now operational and mining Bitcoin. Of course, crypto mining and Bitcoin mining is a hype sector. This comes in the backdrop of Bitcoin rebounding massively and comes before Any's merger, all of which created the perfect storm of hype for inflows back into this play. What's next? Well, previous patterns suggest that it's on an overall pump and dump uptrend. She's pumping, she's dumping, but she's also going up a little bit every single time. Okay, AMC Ooga Booga. So now I make fun of the Motley Fool quite a lot, usually because all of their analyses on AMC are based purely in the fundamentals and never even mention a short squeeze. But today an article actually came out taking some time to legitimately dive into the short squeeze metrics of this, which is important since that's the main reason people are buying it. Now, of course, the title and even the author's Twitter handle @AMC Scam, well, those two things are quite telling as to the direction they took with their analysis on the short squeeze potential. But at least they mention it, right? That's a step in the right direction, I think. Well, the basic point of the article is that the recipe for a short squeeze just isn't there. They say AMC short interest and short ratio aren't all that impressive, quoting the public number of about 18%. And then in terms of naked shorts, failures to deliver, and dark pool activity, he says those haven't been proven true. I looked pretty hard in the article, and of course I couldn't find any mention that you can't actually prove them to be true, by nature that the system is purposely set up. Purposely set up not to be transparent to the public in order to protect the interests of institutional money. Kind of reminds me of when I was a kid and I'd go and sneak some cookies when my parents were gone. And then when they came back, they'd be like, "Where'd all the cookies go? Charlie, you were the only one in the house." And sure, I could have said, "Hey, anything could have happened to those cookies. You weren't watching. Nobody knows what happened." But parents aren't stupid, and that doesn't work with children. But it does work in the stock market. But anyways, let's just take the public short interest at 18% that he's quoting here. Is that enough for a squeeze? Well, what was the biggest short squeeze of all time? Volkswagen in 2008, which stood at 12.8% short interest at the time. What matters for a short squeeze is exactly how many shares are available for a short seller to cover with when the time comes that they decide to cover. If there's not that many holders willing to sell, guess what? There's less supply available and they have to bid up the remaining shares. Similar to that, in the case of AMC, the strength of a squeeze with this would be based on how many shares short sellers are actually able to find when it does come time for them to decide to cover. And that's very, very difficult to measure, as is the number of actual legitimate short interest. But point is, the recipe for a short squeeze certainly is there. Does it guarantee anything? No, but there is a recipe there. And to be honest, who knows if someone's gonna unhook the oven. Okay, Win. Win is selling off rapidly towards pre-vaccine lows, sitting almost tied with where we were about a year ago, coming close to cutting in half from its highs earlier this year. The other player, Las Vegas Sands, is actually getting even closer to the worst areas of the pandemic. Why the gambling sell-off? Well, because of Chinese regulatory fears spreading into the gambling niche. China is playing lip service to tighter regulations in Macau, of which Las Vegas Sands and Win both have huge exposure to. What do the numbers of exposure look like? Well, Win generates $184 million in revenue from Macau in the last report and $355 million in revenue from Vegas in that same time period. So in comparison, Macau's operations are no laughing matter. What about Las Vegas Sands? When talking revenue, Macau operations generated $855 million in the last quarter report. At the same time period, their Las Vegas markets only generated $290 million. Las Vegas Sands has substantially more exposure to China, and they're only getting more exposed because they're putting oodles and noodles of money in building more projects over there. So what is really my response to this? Well, I'd argue that quite frankly, unless China really decides to put the hammer down, then this is way, way overblown. We've seen China paying a lot of lip service to a lot of different areas of their economy right now. We've seen a lot of scary headlines. We've seen a lot of fear. China is a weird market. They just put curfews for video games, for Christ's sake. But considering the trend of Chinese regulatory crackdowns that we've seen over the last couple of months, it's really difficult for me to argue that it's already hit peak fear. And even if it is peak fear, I don't think this is going to be a fast recoverer either. I think that in the long term, these are going to prove to be good deals, but I would say that the diligent way to play these is to stand by and see how good of a deal you can get. Okay, main entree, let's talk Lucid. So Lucid stock has done a whole lot of nothing, staying within the general $15 to $30 region and bouncing back and forth, now sitting at just about $20. Overall, it's not a great time to be any EV company. Chips, labor shortages, yada, yada, yada. However, as always, Lucid does have a strong team. They do have production capacity, and they pretty much have the Saudis behind them. And this morning, Bank of America put out a release calling Lucid the Tesla/Ferrari of new EV automakers. Reasons? Well, they say our buy rating on Lucid Group is predicated on our view that the company is one of the most legitimate among the universe of startup electric vehicle automakers, and also a relative competitive threat to the universe of incumbent automakers. By incumbent automakers, I would say primarily Tesla. And then they go on to say that the Ferrari comparison comes from the fact that Lucid also supplies key components for Formula E, which is the highest level of fully electric motorsports league. But here is where you get into the meat and potatoes. They go on to essentially saying that a better measure of Lucid's success than the near-term financials while the company/industry is still in the early stages will be customer reservation trends. 100%. Very, very valid point. Wall Street firms overlook early stage companies and early stage industries as a whole because they're like, well, the quarter by quarter numbers don't look good. If you're looking at, say, I don't know, EVs, look very simply at where EVs were in 2015 and where they are now and the adoption increase year over year. If you look at that, you see, wow, booming industry. But if you look at how much money these companies are making, you're thinking, wow, dying industry. But what matters is actually being able to serve the customer, because once you reach large big, massive scale, that's when you start making money. That's when it starts looking like a give me money industry instead of a take money industry. So basically here you have Bank of America saying, yeah, Lucid needs to be judged based on its reservations and how it can fulfill demand. That being said, one of the things that I am worried about is how Lucid is doing in its early production stages with the fact that we're in a global chip shortage and material shortage. We know companies like Tesla are suffering, and they have some of the best relationships in the industry with suppliers. How is this new dog on the block doing? And we really don't have any answers, but here's the thing. We do have an upcoming catalyst. On September 27th, Lucid will be holding something called the Production Preview Week, which will open their production facilities to analysts and undoubtedly cause media coverage to skyrocket. Analysts will be able to ride the Lucid Air and review it, as well as presumably answer a lot of questions about production capacity. And at the end of August, Lucid let Motor Trend review and drive the Lucid Air, and that created a huge positive press storm. This is going to be a much, much bigger deal. This is the first big positive catalyst that we've had for Lucid in quite a while, and it should cause a stir in terms of analyst coverage and a lot of answers that we've been wanting for months. Where do we stand with production? Are the specs lining up? Do we have an update on demand numbers for this vehicle? These are all questions that hopefully we'll have answered on September 27th and as that event takes place over the course of that week. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course our daily morning briefings, well, I'll go ahead and put a link to ZipTrader you below. Coupon code FUDSTOPPER50 will get you $50 off before checkout. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to Webull, and they will give you 2 free stocks when you sign up and deposit with just $5 using our link below. Anyways, that caps off the video. Have a good one, and I'll see you in the next one.